Okay, so good eve good evening, everyone. So welcome to our 2026 economics, okay, MCQ paper discussion. Okay, and I am very much happy to see you all. So yes, there are good numbers joining in the YouTube, and I'm hoping some numbers more. Yes, they will be joining, I think. So yes, so the trend is the English medium students. What is the trend of our English medium student is they mostly won't join the live classes. Okay, but they actually very much appreciated to watch the recordings. Okay, so that is the pattern. That's the trend of our English medium students in the commerce. Okay, so yes, and I'm very much appreciated for that. Okay, so yes, so today we are here to discuss MCQ, a full MCQ paper. Okay, so yes, now the time is 7:10, and I'm hoping to do this session less than 4 hours. Okay, so we have a plan how to cover this entire MCQ within a stipulated time. And yes, I'm hoping this MCQ session will be very much useful for you, which means not with just gaining the knowledge. Okay, so apart from that, how to attend the MCQ questions, how to think logically. As you know, in the economics, okay, in the economics paper, attaining good results, it's not a big deal, but doing the part 2, it's something like it's easy in the in economics. Okay, but actually what the most of the students face is doing the part 1, not the time constraint. They can do the part 1 within 2 hours, not the time constraint, but getting the right answers. Because in the part 1, the most of the questions you get is some indirect questions, which means if I want to say in a local language, questions in it. If I want to say in Tamil, நேரா போகாம கொஞ்சம் சுத்தி வந்து தான் questions போகும். Okay, so that's how the questions will be in the economics part 1. You have to think in a very broader way, okay, in order to do that question. So I am here, I will let you know how to attain these questions, how to think logically. Okay, because if you see in the exam paper, almost the 5 answers are same, but there is a method how you can get through a right answer. Okay, so I will show how to do that. So first of all, before starting to the before going to the session, let me introduce myself. Okay, so my class students have known me, okay, for a 4 to 6 month of period because I did the rapid revision classes. But there are students, since this is a free seminar, there are students who join my classes and who not join my classes as well. So I am RP Vikash. Okay, so I am the economics and the accounting lecturer. Okay, so I am doing the economics and the accounting subject from the 2022 level as well. So almost a 5 year experience in the teaching career. Okay, so apart from that, I am an graduate from University of Colombo, specializing in business economics. Okay, and I am a chartered accountant finalist. Okay, so these are the brief qualification of me. Okay, I think no need of elaborating myself more in this MCQ past paper discussion. Okay, in MCQ paper discussion. Okay, so yes, this is me. Okay, and yes, that's enough. So we'll go to the first. We'll go to the exam structure, most awaited section. Okay, so I think most of the students know how the exam structure will be. Okay, so economics, your economics paper. Okay, So your economics paper will be August 10 and 11. Okay. Actually, you are getting your economics paper on these days, August 10 and 11. So, August 10 is your part 1 exam and August 11 is your part 2 exam. Okay. So, let me break down the structure of the economics paper. Okay. In the economics paper, you will be getting two parts, part 1 and part 2. Okay. Part 1 comprises 50 MCQ questions, multiple choice questions. Okay. And part 2 comprises two parts. Okay. Part A and part B. Okay. So I start with the MCQ. Okay. For a one question, you will be getting 5 answers. Out of these 5 answers, we have to choose one. Okay. So this is how the MCQ structure will be. And let me break it down for the unit wise. Okay. You know, there are 12 units in the economics. Economics, there are 12 units. Huh? You will be studying 6 units from grade 12 and 6 units from grade 13. Okay. So, in the MCQ, with the combination of 12 units, you will be getting 50 questions. Okay. So, for the MCQ, my honest suggestion is you have to study the whole 12 units, not with a deep study. Okay. So, there are some studies, right? So, deep learning and like overall learning and layer learning, there are some learning methods like that. But what I want to tell is for the MCQ, just go through an overview of these 12 subjects. For an example, in the unit 12, you have to particularly go through with the statistics, which means the real-time data. Okay, since you are in 2026 A-level batch, you have to go through with the 2024 data. Okay, remember 2024 data, the important CBSL data. Okay, the World Bank data, the employment rate and the poverty rate, happiness index, poverty index, and development index, sustainable development. So those indexes are there. So you have to go through them. Okay. So then if you come to the unit number 9, there are some graphs, you have to go through them, and there are some equations, effective rate of protection and terms of trade, income terms of trade, commodity terms of trade, absolute advantage, comparative advantage, the calculations. So you have to go through with the just overview of them. Okay. You don't have to memorize the definition and the reasons and lot theoretic theories in order to get the 50 questions. Okay, so you don't have to memorize them, but you have to just give an overview of the calculations, the data, the basic theories. That's it. Okay, so actually I have a breakdown of in which units you will be getting how many questions in the MCQ. Okay, I have a breakdown. I will let you know how to get that breakdown PDF. Okay, so yes, just for the time being, be with me. I will explain in a crystal clear manner how this paper structure will be. Okay, so this is MCQ, and for the part 2, you will be getting 5 questions. for the part A. And 5 questions for the part B. Okay. So you might ask, some students might ask, sir, do we want to do the whole 10 questions? No, it's not like that. Out of these 10, you have to do only 5 questions. Okay. But this is the criteria. From a particular part, from a one part, maximum you can do is 3 questions, minimum you can do is 2 questions, which means you have to do 5 out of 3 in one part and 5 out of 2 in another part. Okay. I'm not telling you have to do 3 questions in the part A and 2 questions in the part B. You can do 3 questions in the part B and the 2 questions in the part 2 as well. Part A as well. Okay. The choice is up to you. But the minimum requirement is 2 from a part and maximum requirement is 3 from a part. You can't do 4 questions in the part A and 1 question in the part B. That's wrong. Okay. Even if you do that, you will be getting 3 questions, 3 question marks for the part A and 1 question mark for the part B, which means you will be losing 20 marks. Even though you did 5 questions, you will be losing 20 marks. So the criteria is what? 3 questions from the part A and 2 questions from the part B. Okay. So yes. So actually, this is how the most of the students does the exam, because I have a that paper discussion and the marking came throughout the 5 years. Okay, throughout the 5 years we did an analysis. So based on the analysis, what we got was most of the students do 3 questions from the part A and 2 questions from the part B. Okay, I will show you what are the questions most of the students do. The question 1, the question 2 and the question 3 from the part A, and question number 6, question number 7 from the part B. Okay, believe me, most of the students who are watching this session, who join this session, also thinking to do these questions in their part 2. Okay, believe me. Okay, so that's the actual truth, because these questions are very much not easy to get marks. If you do these questions, it is very much easy to get these marks. Okay, so there are 12 units. How this 12 units comprises with the each part A and part B. Okay, so based on the unit 1, you will be getting question number 1. Unit 2, question number 2. Unit 3, question number 3. Unit 4, question number 4. Unit 5 and 6, question number 5. Okay, so this is how you will be having the questions. Okay, in the part 1. In the part B, okay, unit 7, question number 6. Unit 8, question number 7. Unit 9 and Unit 10, question number 8. Unit 11, question number 9. Unit 12, question number 10. Okay. So this is how you will be getting the questions. Okay. So attaining the part 2 is very much easy, as I said earlier, because when you are going to do the part 2, maximum you have to study is only 5 units. Okay. Imagine you finished your part 1 at August 10. Part 1 is done. You have only a couple of 24 hours remaining to do the part 2. Okay. So yes. So which are the units you need to study when you are going to do the part 2? If you are going to plan to do the question number 1 and question number 2 and the question number 3, which means you don't have to study the unit number 4 and unit number 5 and 6. Forget about that. Forget it. Forget. If you are planning to do question number 6 and 7, which means you don't have to study question number 9 and 10, which means unit number 11 and unit number 12. See, only 5 units, minimum 5 units, maximum 6 units. Okay, only 5 units is very much enough if you want to study for the part 2. Okay, so this is the basic analysis of which the part 1 and part 2. And I have a crystal clear PDF with the past papers analysis, how the past students did the part 1 and the part 2, and what are the probable questions on which unit, what are the probable questions you will be getting for the part 1, which means the number of questions you will be getting from each unit for the part 1 and the part 2. Okay, the key areas you have to study, the mistakes you don't need to do in the when we are doing the part 1 and the part 2, and what are the common mistakes did by the previous students and what are the remedies they need to have. Okay, so there is a crystal clear PDF. Okay, so that PDF link is, I think, which is included in the description. Yes, description, which is included in the description, the YouTube description. There's a drive link, so you can click that drive link and go to the Google Drive and download it. Okay, so make a printout. I think today is 16, so August 10 is your first exam, so I think around 20 days. There's a 20 days, so make sure you have enough practice based on those criteria. Okay, which is very much needed, very much important when you are doing the MCQ paper, MCQ and the part 2 paper, both economics paper. Okay, so today we are not focusing the part 2 because in these part 2 past paper questions, theories have been discussed in our rapid revision classes. Okay, so actually we had a rapid revision class for the 2026 batch, which means in the 4 months I have covered the entire grade 12 and 13 syllabus. Not the entire grade 12 and syllabus means not the A to Z. Okay, entire grade 12 and 13 syllabus, the entire syllabus with exam focused contents. Okay, I did the full syllabus. Okay, I just told my students what are the key areas you need to focus. Okay, I did the past papers. I attached every model questions in the active. Okay, so we did a crystal clear revision program in the 4 months, which we started in the April, May, June, July. I think in the last week I have finished all the recordings, all the live classes was finished. Okay, all those things are uploaded in our LMS. Okay, and my LMS link also, yes. Okay, so our LMS link also, which is included in the description. Okay, so if you want, just let me know. I think my WhatsApp number is also, yes, included in the description. All the details are included in the description. If you want anything to further clarify, anything regarding the subject, please let me know in the WhatsApp. Okay, so I will share my WhatsApp number also, 071 201 2692. This is my WhatsApp number. Okay, so even if you are my student or not, doesn't matter. If you have any questions, any clarifications, any doubt, please reach me out in the WhatsApp, and I'm very much happy to answer those questions. Okay, doesn't matter if you are my student or not. Okay, so if you want any recordings, any tunes, Okay, please reach me out in the WhatsApp. Okay, so all of these things are available in my LMS. Okay, so the part 2 is completely done for the revision class, but I want to give a free session to everyone about the part 1 because uh, even everyone know attaining part 1 is the biggest challenge in the MCQ. So that's why I want to do a free session for everyone. Okay, so we'll look at the timing of the part 1. Okay, so you will get 2 hours, which means 120 minutes. Okay, for the part 1. Okay, and 120 minutes you will be getting 50 MCQs. 50 MCQs, which means for one MCQ you have to spend 2.4 minutes. 2.4 minutes, which means in a crystal clear manner 144 seconds. Averagely, right? But it may be varied. Some questions you will spend around 1 minute. Within 1 minute, some questions you can get the answer. But for some questions, you will need 5 minutes or 6 minutes. Okay. So I will give you crystal clear timing. So this is the average now. This is the average timing. Okay. This is the average timing. But my suggestion is averagely spend 2 minutes for one MCQ. 2 minutes for one MCQ. 2 minutes. Okay. And what will you get? Okay. If you do the 50 MCQs, you will end up in 100 minutes, which means you spare 20 minutes. You have a spare time. So, have you heard about this spare time? What is this spare time? Okay, because in the MCQ, attaining 50 questions simultaneously in a correct way, it's not possible, right? You might have some doubts, you might don't know the answers for the questions. So what my suggestion is, yes, when you are doing the MCQ questions, at some point you will have some doubts on the question. Okay, doubts on that question. Sometimes you couldn't find the answers. So what you have to do, spend the first 2 minutes on that question. Okay, try to figure out the answers within 2 minutes for that question first. Yes, you are trying, you still couldn't figure it out. The 2 minutes is done. Okay, even if you can't figure it out the answers in the 2 minutes, okay, what you have to do, imagine you have a doubt in the question number 7. What you have to do, just put a big star on the question and skip to the next. Skip that question and go for the next question. Skip that question, go for the next question. Okay. Likewise, you can do. Okay. So after finishing the entire 50 questions, you have a spare time of 20 minutes. 20 minutes. So now you can use this spare time towards the start question, which means the doubted questions. Okay, so now you're relaxed, right? Imagine you have around 5 to 6 doubted questions. Okay, already you spent 2 minutes, right? So already you have a clear idea about the question. So now you don't have to read it again and again and again. Now you can spend that 20 minutes to the start question, which means within 2 minutes of time, you don't have to be stressed. You don't have to be stressed with time. You don't have to be get bored with the question. You can focus on your mind because you already did the most of the questions. You only have 5 or 6 questions left in the paper. Okay, so you can use that spare time with efficiently. Okay, so that's how you have to do the MCQ paper. Just spending 10 to 15 minutes in a particular question, okay, particular one question, and losing 5 to 6 questions at the end, which is unnecessary, right? To get 2 marks, you are losing 12 marks. Is it a logical student do? No. Okay, so my honest suggestion is get a star on that question. If you have a doubts, if you don't know the answers for a particular question, put a star. Okay, and use this spare time towards this question. Okay, so that's how you can manage the question. That's how you can attain a higher marks in the MCQ. Imagine, I'm not saying to get the 50 out of 50. Imagine out of 50, you will be getting 40. Not 4, not 40. Okay, 40 correct. Okay, to get a A, you only need 35 out of 50, which means out of 100, you need 70 in the part 2. Because part 2 comprises, for the each question, you will be getting 20 marks. You will be allocated for each question, you will be getting 20 marks. Okay, so out of 100, you have to get 70 marks, which is very much easy. If the most of the students get the highest marks on question number 2 and question number 3. Okay, this is the most attaining question. If I rank, most of the students get highest number of marks in the question number 2 and question number 3 and question number 1 and question number 7 and question number 5. This is how most of the students get the marks. So getting 70 marks out of 100, it's not a big deal in the part 2. Okay, most of the students ended up by getting 80 marks. Okay, so this is the minimum requirement you have to get in order to get an A in the economics. Getting an A in the economics, which is not a very much difficult portion, okay, which is not very much difficult. If you can get 40, I'm not telling to get 50, not 50, 45, 48. I'm not telling to go to that page. Okay, just in your mind, try to get 40. 40 is your safe zone. If you get 40, you can get minimum 35 out of in the part 2. Okay, so this is the plan for the economics paper, and this is the plan for the MCQ paper as well. Okay, please note it down today. If you can't get more than 30 marks in the MCQ, imagine you are getting only 28 of something out of 50. 28, which means in order to get the A, how much marks you need? 47 out of 50. Yes, 55. In order to get the A, you need 47 out of 50. Getting 47 marks in 50, not the average student can do. Not everyone can do. Okay. So even a handful number of students will get 47 out of 50. 47 means you have to score 94 in the part 2 paper. It's not an easy thing. Okay. So don't think I'm not focusing on the part one. I only focus on the part two. I can score high marks on the part two. So part one, it's not a big deal. I'm not doing the part one. I don't consider part one. Don't think like that. Okay. Please try to score more than 30 in the part one. More than 30. The 30 is the minimum score. 40 is the average score. 45, more than 45 is the definite A pass of your exam. If you can score more than 45 in the MCQ, which means you will definitely getting a A pass for the economics. Which means definitely means 100 out of 100 percentage. 100 percentage you will be getting A pass for the economics. If you score more than 40, which means more than 80%. 80 percentage you will be having A pass for the economics. 80 percentage sure. If you score more than 40. 45 means 100%. More than 30 means around 50%, 60%. Okay. So this is the basic scenario. Okay. So yes, I think that's pretty much enough with the exam paper discussion. So yes, now we'll focus the our today's session about the MCQ. Okay. So I am here to teach you how to attain the MCQ papers, how to think logically and those stuff. Okay. So today we are going to discuss 2024 A level paper. 2024 A level paper. Okay. I think most of the students have the A level paper. Even if you don't have the paper, it doesn't matter. The drive link, yes, the drive link also uploaded in the description. Okay. You can go click and download the PDF. So MCQ, the part one we are discussing today. Okay. I will show you how to think logically, how to get the correct answer. Okay. So first of all, uh, we thought of splitting the paper into 5 portions. Okay. So first 1 to 10, 11 to 20, 21 to 30, and 31 to 40, and 41 to 50. Okay. So we are dividing the paper into 5. So now we are going to discuss this question number 1 to 10. So I will give you just 10 minutes is enough. I will give you 10 minutes because I want to explain it. I'm not just giving you the answer only. I have to elaborate the question. I have to elaborate the answers as well. Okay, so if I give 20 minutes for each of these, for the paper working, okay, for the extra time, the working time is also get 100 minutes, which means around 2 hours. Okay, so if the working time is get around 2 hours, which means I have to drag this session to 12 o'clock, 12:30. Okay, so which is unnecessary. Okay, so I will give you 10 minutes. Okay, so try to do yourself question number 1 to 10. After the 10 minutes, I will show you how to attain this question, how to read the question, how to read the question, how to read the answers, how to think logically, and all the stuff will be discussed. But before I am discussing those things, I want to know, not I want to know, you have to know what is your current standard, how you are thinking the question. Okay, how you are thinking the question, how you are reading the question, how you are attaining the question, how you are answering the question, your answering method, all the things needs to be elaborated before I am doing the question. Okay, before I am elaborating. So that's why this 10 minutes is the time to judge you based on yourself. Okay, so the time starts now. Okay, so correctly in 10 minutes I'll be starting the session again. I'll be giving you the answers. I will be teaching you. Okay, so 10 minutes starts now. I think the time is up. The 10 minutes, it's okay. Okay, I think most of the students did the full 10 minutes, full 10 questions, and some students might not. Okay, I didn't tell you to do the 10 questions, the whole 10 questions in 10 minutes. It's not possible. I know. Okay, even if it is possible, you can do the 50 questions in 15 minutes, 15 minutes. Ne? So I'm not telling to do the 10 questions in the 10 minutes, but I am giving the time to judge yourself. Okay, at least you can do 2 to 3 questions. Ne? Right? So based on that questions, judge yourself. Okay, what is the level you are in when you're doing the MCQ paper? Okay, so yes, we'll start with question number 1. Okay, the question number 1. The question number 1, the core difference between the normative economics and the positive economics. Okay, the simple way to remember the normative economics and the positive economics is what? Positive economics mostly have the sentences of past tense. If a sentences have, I'll explain in the board, so which will you have a clear idea. Positive versus normative. If a particular sentences have a past tense, which means that sentence is a positive economics. If a particular sentences have a future tense, which means that particular sentence is a normative economics. That's a simple idea. If you know this simple idea, you can do this question. Okay. So another thing is when you are doing the question, use this reducing method, reducing balance method. Actually, you might ask, what is this reducing balance method? Reducing balance method is what? Cutting off the wrong answers in MCQ. Actually, this is a psychological method. Okay, actually, the typical Sri Lankan behavior is what? Typical, not Sri Lankan, typical Asian behavior is what? Harida? So, if I want to explain this thing in Sinhala, don't get me wrong, but if I want to explain this in Sinhala, this is the actual truth. Ne? ලංකාවේ මිනිස්සු හැම වෙලේම වැරදි හොයන එකේ මාර දක්ෂතාවයක් තියෙනවානේ. හැම මිනිස්සෙක්ගෙම හැම මිනිස්සෙක්ගෙම හැම ඉවෙන්ට් එකෙම වෙඩින් එකට ගියත් වැරදි හොයනවා. අරක හරි නෑ මේක හරි නෑ. මේනෙම වැරදි හොයන එකේ ලංකාවේ මිනිස්සුන්ව බීට් කරන්න කවුරුත් නැහැ. Sri Lankans if I want to explain in Tamil இப்ப Sri Lankans வந்து எப்ப பார்த்தாலும் பிழை கண்டுபிடிக்கிறதுல மாற ஒரு டேலண்ட் ஒன்று இருக்குதானே. என்ன வெட்டிங்க்கு போனாலும் ஒரு இவெண்ட்டுக்கு போனாலும் இந்த ஒரு ஃபங்க்ஷன்ஸுக்கு போனாலும் அது சரியில்லை இது சரியில்லை நல்ல டேலண்ட் ஒன்று இருக்குதானே. So use this talent. The typical Sri Lankans have this talent, right? So use this talent and apply this talent in your exam. So how you can apply this talent? There are 5 answers. Ne? First rule in the MCQ paper, okay, read the question correctly. First rule. And read the total of 5 answers. Even you know the answers, doesn't matter. Read the whole 5 answers. That's the first rule. Read the question fully. Question and answer fully. Okay. And after that, just remove the wrong answers. In the MCQ, rather than searching for the correct answer, just remove the wrong answer. That's how you can get the correct answer. That's what we call the reducing balance method. Rather than searching for a correct answer, just remove the wrong answers. Just cut it off. and you will end up in getting a correct answer. Okay, I'll show you. The core difference between the normative economics and the positive economics. Okay, so in this session, Putha, don't expect me to explain the A to Z of the normative economics and the positive economics, A to Z of the unit 1 to unit 12. So this is not a revision program. This is a MCQ paper-based program. Okay. So in this program, I will cover the important areas. How do you want to think? How do you want to answer the questions, and the important theoretical areas which you needed in order to attain the MCQ in the important theoretical areas. Okay. But remember, this is not a revision program. I'm not explaining the whole positive statement. If I want to explain the positive statement, I can spend 30 minutes. Is it good you to take 30 minutes to explain the every questions? 30 minutes to 50 means I want to spend around 1500, which means it will take 10 more than 10 hours. Is it okay to start today 7 p.m. and finish the seminar series at next day morning 7 p.m. 7 a.m.? It's not good, right? Since you don't have that much of time in your calendar, since you are getting your A-level exam in 20 days. Okay, so this is a approximately, this session can be went around 4 hours. That's the time. Okay, so I am here to discuss the MCQ, how to attain those things, and that's it only. Okay, so yes, the core difference between the positive statement and the normative statement. Okay, normative economics provide descriptive analysis, while positive economics offers policy prescriptions. Okay, policy prescriptions. No idea, right? No idea. What is this descriptive analysis and the policy prescription? I have mentioned this past tense and the future tense. And what is this policy? Okay, you don't know. If you don't know a particular answer, just calm and read the next answer. Okay. Positive economics is a fact based and normative economics is value based. So actually, what is meant by this fact based and value based? Fact means original facts, the original notes, the original theories, which means facts are what? Facts means what? Based on the past events, you create the facts, right? Not facts, facts. In fact, fact එකක් මොනවද? The past events, the past events is happened. Based on the past event, I am giving the judgments. So that is fact. Okay, so it might be the answers, which is the facts based and the value based. Here it might be the answer. Okay, the answer number 3, normative economics based on empirical evidences, while positive economics based on subjective opinions. It's absolutely no, right? Because evidences means, how do you collect evidences based on the past events, right? So I told normative economics is future based. So how do you collect evidences based on the future based? You can't collect evidences for the future, right? You can collect evidences only for the past event. So you can cut off the answer number 3. Answer number 3 is not correct. You can cut off it. Okay. Answer number 4. Positive economics relies on value judgments and normative economics is objective. Okay. Judgments. Positive is past tense, right? It is judgments? No, right? How judgment means what you are expecting. So judgments, no. Positive economics, no judgments. Answer number 5. Positive economics focuses on ethics while normative economics deal with hypothesis. Yes, it might be the answer. Because ethics and hypothesis means the judgments. Okay, yes, you cut off 2. Okay, still we have time, still 2 minutes is not finished. Still again read the answer number 1, A, B and E. Answer number 1, 2 and 5. Normative economics provide the descriptive analysis, while positive economics provides the policy prescriptions. Descriptive analysis, one based on the past events you made the analysis. That is normative? No. You can cut it off. Now you have the answer number B and E. Okay. Positive economics based on ethics, while normative economics deals with testable hypothesis. Should I mention any word of ethics? This is economics, right? Economics not talking about ethics. Does we you learned 12 units, right? In the past 2 years you learned 12 units. Have you ever mentioned the ethics word in the economics? Have you ever used? Have you ever studied the word of ethics? No, right? So why they are talking about the ethics? It's wrong, right? We are not in the economics, we didn't talk about the ethics. So ethics won't be the answer. So the answer is what? Answer number 2, which is our answer. Okay. I think within 2 minutes I got the answer. This is how you have to get the answer. Okay. So yes, we'll do the question number 2. Which of the following statements best explain the concept of capital? Capital means what? Capital means what? The man-made aids in order to produce the goods and services is known as capital. Capital. Okay. Capital represents the human and labor innovation in the production process. Okay, there are 5 answers. Okay. So yes, capital represents the human labor and the innovation of the production. Human labor? No, right? What is capital? The man-made aids. There is no word called man-made aids. So you can cut off the answer number 1. Just cut it off. The capital refers to any financial investment. What is capital actually? The man-made aids in order to produce the goods and services. So not the financial investments. Man-made aids. We don't have the word of man-made aids. So answer number 2 is wrong. Cut it off. Answer number 3. Capital includes only tangible assets used for production such as machine and buildings. Yes, it may be correct. Machine and buildings are man-made aids. Yes, the tangible assets. It might be correct. So just keep it. Answer number 4. Capital refers the financial resources to use fund the production. Financial resources? We know money is not considered as a capital in the economics, right? Money is not a capital in the economics. So financial resources means the money, right? So answer 4 is absolutely not. Answer number 5. Capital refers to a produced means of production, which means this is helping the production. So answer number 3 and 5. There might be a confusion between the answer number 3 and 5. Okay. So there are 5 answers. Answer number 1, 2, 3, 4, and 5. Okay. We got cut it off, cut it off, cut it off. Okay. Answer number 3 and 5 are there. So now read again the answer number 3. Capital include the tangible assets, only the tangible assets used for production, such as machines and buildings, and capital refers produced means of production. So produced means and the tangible assets. Produced means and the tangible assets. Okay. So actually, what is tangible assets? Tangible asset? We can say chair is a tangible asset. Table is a tangible asset. This phone is a tangible asset. This tab is a tangible asset. Okay. So even this light is a tangible asset. So this tab, this camera, this table, this chair can be considered as a capital in order to produce goods and services? No, right? So, not the all tangible assets are capital. Not the all tangible assets are capital. Only, only the capital, which means in order to produce the goods and services. That is known as capital. So, answer 3 is not correct. So, answer 5 is the correct answer. Okay, so this is how you can do the MCQs. Question number 3. A movement along in the production possibility curve from one point to another point involves no change in the opportunity cost and the production efficiency, a change in the opportunity cost but no change in the production efficiency, but change in the productive efficiency but no change in the opportunity cost. Okay, no change in the opportunity cost. Okay. So yes, there are some answers. Okay, so the question is what? The movement along in the production possibility curve from one point to another point. Okay. So if you have a such question like this, okay, don't write anything in the MCQ paper. Use your MCQ paper, your exam paper as clean. Okay, what you have to do, okay, so I think yes, in the table, just knock it in the table. Okay, by using the pen, just knock it in the table, and the examiner will come and ask additional sheet. On the additional sheet, do your workings. Okay, so the movement along in the production possibility curve. Okay, this is the movement along in the production possibility curve, which means shifting this to this point. Okay, so the movement along in the production possibility curve from one point to another. So let's imagine, so I'm going this point to this point. Okay, so this is decreasing, this is increasing. Okay, so movement along in the production possibility curve, no change in the opportunity cost, no, right? No, there is a change in the opportunity cost because this is increasing opportunity cost. If you go one point to another point, there will be a definite opportunity cost. So the first answer is wrong. Second answer, a change in the opportunity cost. Yes, a change in the opportunity cost, but no change in the production efficiency. Absolutely correct, right? So each and every point in the production possibility curve have the production efficiency. The second one is absolute correct. But wait, just read the rest of the answers also. A change in the production efficiency, no. By reading the one word, you can tell change in the production efficiency, no. Answer 3 is incorrect. Answer 4, no change in the opportunity cost. No. There's a change in the opportunity cost. The answer 4 is incorrect. A change in the production efficiency, but no change in the allocation. No. A change in the production efficiency means it's definitely no. So the correct answer is 2. For the question number 2, so question number 3, the correct answer is 2. Okay. So yes, go to the question number 4. We'll go to the question number 4. A key feature of the socialist economic system. So this is the new trending economic system. So there are new trend in mixed economies. There are two trends in mixed economies. First one is social market. Second one is socialist market. Social market means 70% of market economy, 30% of command economy. Socialist means 70% of command economy, 30% of market economy. So here they are asking about socialist economic system. So what will be the answer? Profit maximization is the objective? No. Profit maximization is the total objective of market economy. Here we have the command economy also. Command economy and the market economy, both we have, but the command economy is 70%, which means the major portion is command economy, which means profit maximization, definitely no. Private ownership of all means of production, no. This is mostly based on the command economy, so government based, no, definitely no. Public ownership of key industries and resources might be, right? Because public means government. So socialist means 70% of the government intervention. So it might be the answer, but with the rest, minimal government intervention into the economy. This is minimum government. Okay. So this is maximum government, which means 70% means 70% of command economy. Answer 4 is wrong. The government plays no economic role. No. Definite no, because 70% we have command economy, public, right? So the answer is 3. For the question number 4, answer is 3. Okay. Let's go to the question number 5. The factor that can cause the movement along in the supply curve is a change in movement along in the supply curve. We have supply change and quantity of supply change. Movement along in the supply change means this. This is the supply. Okay. Movement along in the supply change means this. Quantity of supply is increasing or else quantity of supply is decreasing. If the quantity of supply needs to increase or decrease, which means if the Q1 needs to go to the Q2 and the Q3, what actually needs to have, the price needs to increase, right? If the price increase to P2, the quantity increase to Q2. If the price decrease to Q3, the quantity will decrease. Okay. So this is the movement along. So if we need to have a movement along, okay, the change in the cost of the production, no, we are not discussing about the cost of the production. The price of the good itself, yes. Consumer income, technology, no. The correct answer is 2. 2 is the correct answer. Okay. The question number 6. All of the following cause a rightward shift in the market demand curve for a normal good except. Okay. Rightward shift in the market demand curve. Which means this is demand. Demand is going to increase. Okay. How the demand is going to increase? Question number 6. An increase in the price for a substitute product. Okay. So substitute product price is increasing. So if the substitute product increase, does our demand curve will go to the rightward shift? We'll look. We don't know it. Okay. We don't know it. An increase in the consumer income? Yes. If the increase in the consumer income, the market demand curve will go to the rightwards. A decrease in the price of the complementary good? Yes. The decrease in the price of the complementary good, just the market demand curve will go to the rightwards. And decrease in the price of good itself? If the price of good itself decrease, if the price decrease, the quantity demand only change. The quantity demand only change. That doesn't change this. So an increase in the number of consumers in the market just is definitely increase the demand curve. So actually what is meant by this substitute good and the complementary good? Substitute good is what? The competitive good. The complementary good is what? the combinative good, which means tea and sugar is a complementary good. If you want to use the tea, තේ බොනකොට සීනි දානවා ටී කුඩිකන යන සීනි පොඩුවානේ, so which means a combination good, complementary good. Okay, we can use those goods together, complementary goods. Substitute goods is what? The competitive goods. Butter and margarine, either you can use butter, either you can use margarine, so competitive. Tea and coffee, you can use both, but not together. Can you drink a tea and coffee together in the mix? No, right? Tea or coffee, not tea and coffee, tea or coffee. So increase in the substitute goods will give an increase in the demand curve. But the question is what? The question is the rightward shift of the market demand curve for a normal good, except, which means this. So the price of the good decrease in the self will give a movement along in the demand curve. The movement along in the demand curve, not the shift in the demand curve. So the answer is 4. Okay. If the price changes, only there will be a movement shift in the demand curve, like the supply shift in the supply curve. Okay. So yes, the question number 7. The question number 7. When the price of an inferior good falls while others remain unchanged, consumer will demand more because income effects dominates the substitution effects. Less because the good is inferior. Because substitution effect and the income effect reinforce each other. Less because substitution effect is negative. Okay. More because substitution effects dominates the income effect. Okay. So in the inferior good, there are 3 types of goods. There are 3 types of good. Okay. Normal good and inferior good. Yes, normal good and inferior good. Okay. Not 3, just I'll explain 2, so that is enough for you. Okay. So actually what is meant by this income effect and the substitution effect? Income effect means what? Income effect means what? If the consumer income increase, the quantity of the good will increase. Okay. What is the substitution effect? If the substitute product price increase, okay, our product quantity increase. Okay. So for the normal good, both are plus. But for the inferior good, both are minus. Both are negative. Okay. So that is the idea. The question is what? When the price of an inferior good falls while others remain unchanged, consumer will, which means price is falling. So they are not talking about the consumer income or else price of the substitute product. They are talking about the price of the particular product. Okay. So what is the price effect? You know the price effect, right? Price effect is what? Income effect plus substitution effect, which is equals to price effect. So plus and plus, which is equals to plus. The price effect for the normal good is plus. But price effect for the normal good is, you think it has a minus, and actually it is not. Minus into minus, which is plus. Minus into minus, which is plus. So the price effect for the inferior good also plus. Okay. So based on that, we can do this question. So if the price of the particular product, if the price of the particular product increase, which means, sorry, if the price of the inferior good falls, which means price of that product falls, which means consumer demand more. Consumer demand more because price effect is plus. Okay, consumer demand more. So consumer demand more is the correct answer. So there are five answers. There are five answers. 1, 2, 3, 4, 5. So which answers does have consumers demand more? First answer more, third answer more, fifth answer more. So answer number 2 and 4 is ignored. Okay. Consumer demand more because income effect dominates the substitution effect. Okay. Third answer, consumer demand more because substitution effect and the income effect both reinforce each other. Reinforce means both are actually closing. Reinforce means they are actually combined together. And fifth, more because substitution effect dominates the income effect. Actually, in the normal good, in the normal good, for the normal good, substitution effect is the most demanding, sorry, income effect is the most demanding effect, which means normal good means one, you are daily purchasing products. Soap, what we call brush, book, pen, pencils, those are the normal goods. Okay, you are daily purchasing products. So if your income increase, what you actually do, you buy more, right? So for the normal good, for the normal good, what you actually do, if your income increase, your purchasing power will increase, so you buy more. So for the normal good, mostly demanding, mostly dominating effect is income effect. But for the substituent good, but for the inferior good, substitution effect is the most demanding, most dominating effect, which means you compare your particular good with the substitute good. If your inferior good, if the inferior good price is lesser than the substitute good, which means you go to that inferior. So answer is number 5 because this is income dominating, this is combination of each other. Answer 5 is the correct answer. Okay. So question number 7 is done. After that, question number 8. Question number 8. Suppose good X and good Y are substitute. Okay, substitutes. What will be the effect on the equilibrium price and the equilibrium quantity of good X and increase in the supply of good Y? Okay, increase in the supply of good Y, which means they are asking about the equilibrium price and the equilibrium quantity, right? Okay. So we'll draw a sample market equilibrium for good X. This is for good X, right? Okay. What will happen if the supply of particular good Y is increased. Okay. Supply increasing means what? What will happen to the good Y? What has happened? If a particular good supply needs to be increased, that means that product is available more in the market. Okay. If your substitute products, imagine tea and coffee. Imagine tea and coffee are both there. Okay. In the market, tea is less available, coffee is more available. Everywhere go to the shop, supermarket, Keels, Cargills, everywhere, the coffees are available, no tea. So which means your demand will ultimately decrease. Okay. So what will happen to the demand? The demand is going to decrease. D1. So if the demand decrease, what will happen to your equilibrium price and equilibrium quantity? Equilibrium price will fall, equilibrium quantity will also fall. Think logically. Think logically. So the answer is what? Answer is number 2. For the question number 8, answer is number 2. So in this question, you don't have to apply the theoretical knowledge. I didn't explain about the demand theory or the supply theory or whatever. Just think logically for this question number 8. If you can think logically for the question number 8, which means you are on the track. So look at the questions here. Did I explain any hard theories, any definitions, any hard like these things, very, very big explanation? No, right? Just a simple theory. Just a simple overview of theory is very much enough to attain these questions. Okay. This question number 8 is now correct, and question number 9. Okay, suppose a new technology has been introduced in the production of good eggs, which is sold in a competitive market. Okay. If the new technology reduces the production cost of good eggs, what is the likely impact on the consumer surplus and the production surplus? Okay. So, no hard things here. So this is they are asking about the consumer surplus and the production surplus, producer surplus. So draw a demand curve, draw a supply curve. Okay. You know this is the consumer surplus and this is the producer surplus. Okay. So what will happen here if a new technology comes and production cost of the good eggs is reduced? So if the production cost reduced, what will happen to the market? If the production cost reduced, the supply curve will shift to the rightwards. Okay, there are some scenarios which the supply curve shift to the rightwards and the leftward. Likewise, in the production cost decreases and the tax decreases, government incentives, new technology and new policies, the increase in the number of suppliers, that will shift the supply curve to the rightward, right? The positive impact. So if the supply curve shift to the rightward, which means this will be the equilibrium, this will be the new equilibrium price, and this will be the new equilibrium quantity, and this will be the price number 2. So which means this is the old consumer surplus and this will be the new consumer surplus. The consumer surplus increasing. Okay, consumer surplus increase. This will be the old production surplus and this will be the new production surplus. The production surplus will be increased. Okay, so both consumer surplus and the production surplus will be increased. So the answer is answer number 3. Okay, very simple. Just a one graph is enough. I didn't spend even 2 minutes for this question. Okay, while doing the discussion. Okay, so our last question, question number 10. The price elasticity demand for a good will typically high when a good is a small share of consumer surplus and it's a complement of other goods. Okay. A necessity and perishable. Okay, necessary goods. The small share of consumer expenditure and the substitute to other goods. Okay. The large share of consumer expenditure and the substitute for other goods, and inferior and the complement goods. Okay. So I think most of the students might not get the answers. Okay, even when I'm reading it at a first time, I didn't get the answer as well. So if you didn't get a clear picture about the question, what can you do? What are the remedies do you have? If you didn't get a clear picture about this question, what are the remedies do you have if you didn't get a clear picture? The remedy is, again, you can read the question. Just read the question again. The price elasticity demand for a good is typically high. Okay, what are the situations where the price elasticity demand is typically high? Okay, the price elasticity demand is typically high when the price elasticity demand is more than -1. There are 5 price elasticity demand. Perfect inelastic, unitary elastic, elastic, and perfectly elastic. Perfectly elastic means the infinity. They didn't have a value. The perfectly inelastic means it is equals to 0. Okay. Inelastic means less than 1. So less than 1 is not a high value. Even 1, it's a mid value, but more than 1 is the high value. More than 1 means the example for the price elasticity demand more than 1, or else price elasticity, which means the elasticity demand which is luxury goods. Okay. Luxury goods are the perfect example for the price elasticity demand, which is more than -1, which means the elastic demand. Okay. So these are the points I can get from the question. So now get to the answer. A small share of consumer expenditure and it's a complement of other goods. Luxury goods. Does the luxury good is a small share of consumer expenditure? The perfume you use is 2000, right? The toothbrush you use is 200. Toothbrush is a necessary good. Necessary good is price elasticity demand. For an example, I say if the price elasticity demand is less than -1 means necessary goods, right? So which means if the price elasticity demand is low, the consumer expenditure is low. Which means what are the necessary goods? The toothbrush, soap, rice. For the consumer expenditure is very much low. Okay, when the price elasticity demand is low. Okay. So this is the question when the price elasticity demand is high. So when the price elasticity demand is high, does that give a very small share in the consumer expenditure? No, right? So answer number 1 is incorrect. The necessity and the perishable? No. Necessity means price elasticity demand is less than 1. So answer 2 is no. Answer 3, small share? No. Answer 4, large share of a consumer expenditure and substitute for other goods. Luxury products give a large share of the consumer expenditure, right? The perfume you use, I think for the men's They use around gold, black knight, like fog. These are like this the prices for the perfume is 2000, 3000, right? But for the ladies perfume, imagine the price of the ladies perfume 5000, 6000. I can spend that 5000 for 1 week, man. Okay, 1 week by eating the rice and curry and kottu. I can spend that 5000 for a week, but they spend for a occasion 5000. The perfumes. So perfumes are luxury goods. The consumer expenditure is very much high. Okay, the inferior. No, we are not talking about the inferior. These are luxury goods. So the answer is what? Answer number four. Very simple. Just knowing the little bit of theory is very much enough. But the question is saying PED is more than one, which means PED high value means PED more than one. PED more than one means the for perfect example for the PED more than one means luxury goods. Okay. So question number 1 to 10 is done. Okay. So our chapter number 1 is done. Now what we have? Now we have question number 11 to 12. Okay. Question number 11 to 12. Again, I will give you 10 minutes. Again, I will give you 10 minutes. Okay. Now you know the method, right? Now you know how to think logically for the MCQ. Now you know how to get the answers in the MCQ, right? Now, by using this knowledge, by using these methods I have proposed, now you do the question number 11 to 12. Now you can use this reducing balance method, the way I think, the way I do the questions, the way I get the answers. Okay, now you have that knowledge. Now you do the question number 11 to 20. Okay, I will give you 10 minutes. Okay, I'm a lot I do a lot of talking, so I have to drink some water. Okay, so I'll go and drink some water for this 10 minutes. Okay, so just do the question number 11 to 12. I will give you 10 minutes, and after that I will explain again how to do this question. So your 10 minutes starts now. Okay, so let's start with question number 11. The question number 11 says the cross price elasticity demand can indicate if a good is a necessary or inferior. Okay, closer to. Okay. So, question number 11. In the cross price elasticity demand, after doing the calculations, we get three values: plus, minus, and 0. If we get a plus value in the cross price elasticity demand, which means substitute goods, minus value, complementary goods, 0 means no relation. Okay. So, based on that, read the questions, read the answers. Can indicate whether it is a necessary or inferior. No, we are not getting the necessary or inferior, but we are getting substitute, complementary, or no relation. Answer 1 is incorrect. Answer 2, it is closer to 0 if two goods are closely related. 0 means no related. 3, it's greater than 0 if two goods are substitutes. Okay, greater than 0 means they are using this scale. Okay, in this scale, this is 0. Okay, after 0, greater than 0 means there are plus values. Less than 0 means there are minus values. They are speaking with a mathematical knowledge. Okay, so we have to think like a mathematics here. Okay, in the scale, more than 0 means plus values, less than 0 means minus values. So more than 0, greater than zeros are substitutes. Yes, greater than 0 means plus values. So plus values are substitutes. That's the answer. Okay, let's read the question number, answer number 4 as well. Always negative becomes law of demand. No. Negative means complementary goods. Greater than 0 of two goods are complements. No, it's also a wrong answer. So the answer is answer number 3. Okay. So answer 3 is the answer for the question number 11. For the question number 12, suppose a highly regulated economy has a dedicated move towards to the market economy and remove government price controls in the market. Okay. Okay. The diagram shows such a market where the government had initially to set a maximum effective price. Okay. What was there on the price and the quantity when the government removed the maximum price? Okay. So you have to take, as I told earlier, you have to take an additional paper from the examiner and do this question. So initially, this was the thing. Okay. 50 rupees and no here. Okay. And 40 and here it is 60. Okay. At the initial, they are removing the maximum price. So 50 means equilibrium price. That is known by everyone. But what is maximum price here? 60 or 40? Maximum price means below the market price, below the equilibrium price, which means 40 is the maximum price. 40 is the maximum price. If we are going to, so 40 is the maximum price, so 40 will be the market price. Okay. So if we are going to remove the market price, maximum price, which means we are going to remove this. Yes, we are removing it. After removing it, what will happen? The 40 becomes 50. Okay. And in earlier, what will happen? When the maximum price, this will be the quantity and the quantity also increase. So what will happen? Okay. for the question number 12. Rises from 40 to 50. So there are two answers. Rises from 40 to 50. Okay. Answer number 3 and answer number 5. And remove the shortage and remove the surplus. Okay. When we are implementing the maximum price, what will happen? There will be a shortage. Okay. So if the price rises, what will happen? The supplier will motivate more and the supplier will supply more. Okay. So when there's a maximum price, okay, this will be our shortage. When we are removing it, now in the 50, they can supply this, right? So we can remove this shortage. Okay, very simple. By just having a graph, you can do this question. So most of the students think uh, the MCQs relating to the question number 2 is very difficult. For my opinion, MCQ relating to the question number 2 is very easy. You don't have to memorize the theory. Just by doing the graph, just doing the calculations, you can easily calculate, right? Yeah, just easily you can get the answers. Okay. So doing the question number doing the unit number 2 related questions, which is very easy for my opinion. But let me know yours. Okay, just drop me a WhatsApp message. I can easily understand that. Okay, just question number 13. Let's move to the question number 13. In the diagram D1, okay, in the diagram D1 is the demand curve, okay, for a sugar, and S1 is the initial supply curve. Okay, suppose the government imposes a specific tax on sugar which causes the supply curve shift to S1 to S2. Okay, which areas in the diagram measures resulting a tax revenue to the government and new producer surplus and the debt weight loss? Okay, so I will draw the graph again for your course. And P1. This is A, B, C, E, F. Okay. So they are asking the tax revenue, new producer surplus, and the dead weight loss. Okay. So after implementing the tax, the supply curve shift to the leftwards. Okay. So what will be our tax revenue? The tax revenue, this gap is known as tax revenue. This is the tax name. So this is our tax revenue. VCNG. Okay. Answer is there. This is our tax revenue. And new producer surplus. This will be our new producer surplus. H only our new producer surplus. Dead weight loss. Dead weight loss. This is the dead weight loss. ENN. Okay. So answer number 4. Okay. So for the question number 13, answer number 4. Now we'll do the question number 14. Suppose the government intends to increase the income of a paddy farmers without raising the price of the rice of consumers. Okay. The most appropriate policy to achieve the government objective would be, so they have to increase the income but not to raise the price of the consumers. Okay. So how that government can do that? Giving the subsidies? Yes, that is probable. If you give the subsidy, the price will be reduced. Okay. But they are not speaking about reducing the prices for the consumer. See, that's the important points you have to make. You can increase the farmer's revenue by giving the subsidy, but not without raising the price of the consumers. They are not speaking about reducing the consumer price. Okay, so you have to increase the income of the farmer. How you can increase the income of the farmers without raising the price of the consumer? Confusing, isn't it? So what can we do for that? Just read the answers and we'll get the points. Okay. A release of government stocks into the market. Okay. So government is releasing the stocks. So what if a government release the stocks? If government release the stocks, okay, what will happen to the farmers' income? Does the farmers will get a high income? What do you think? No, right? Because imagine if the government release their stock, so the consumers will go to the government and buy, right? So what will happen eventually? The farmers' income will get low. Think logically. You don't have to apply the theoretical knowledge here. Okay? So the absolutely the first one is wrong. Think second one. Setting a guaranteed price above the market price with an agreement to purchase the unsold output. Okay, you can give a minimum price. Guaranteed price means minimum price. If you set a minimum price, what will happen? The consumers have to buy at a higher price. Okay, you want to increase the farmer's income, but without increasing the price of the consumer. So the second one is wrong. Third one, introducing a minimum price below the market price of the rice, agreement to purchase the unsold output to the government. Okay, unsold output to the government. So it may be correct. Okay, so like this. So this is price 1, this is quantity 1. Setting a minimum price. Okay, setting a minimum price. Sorry, introducing a minimum price below the market. So this is the minimum price below the market. Okay. So actually, if if a government sets a price below the market price, that is known as maximum price, not the minimum price. So the answer 3 is incorrect. Can you get my logic? If you put a price below the equilibrium price, right below the equilibrium price, this price needs to be known as maximum price. This is maximum price and not minimum price. So Can government put a minimum price below the market price? No, right? So government can't put minimum price below the market price. The minimum price should needs to be above the market price. So this will be the minimum price. Megatama minimum price. This is not. Okay, so the answer 3 is incorrect because minimum prices are always above the market price, not below the market price. Okay, instead introducing a maximum price below the market price of the rice, yes. Introducing a maximum price, this will be known as maximum price. You can introduce the maximum price, but you can't guarantee with the sales. You can't tell introducing a maximum price will beneficial to the consumers, but maximum price won't benefit to the producers, right? A payment of a subsidy, Paddy, a payment of a subsidy. After introducing the minimum price, the payment of the subsidy, which means payment of this. Okay, so the payment of the subsidy, which is a good policy without increasing the price of the consumer and also increasing the income for the paddy farmers. So answer 5 is correct. Okay, so you don't have to think in a very high manner, think at very highly. You don't have to do like that. Okay, just go with the graph, just put a graph, just think logically what I think like it. Okay, so for this question I think very much logically. You don't have to explain the theories, you don't have to go with the theoretical aspect, just think logically so you can get the answers. Question number 50. Which of the following combinations of the industry characteristics indicates the monopolistically competitive industry? Monopolistic. How do you remember the characteristics of monopolistic? I told in the revision classes for my students, how can you remember the characteristics of monopolistics? Just remember the examples. So what is the example for monopolistic competition? Clothing shops. Compare the clothing shop. For the girls, I'm not encouraging the boys, okay, because boys dresses are always same. For the girls, just compare the shops. Only Meat, Fashion Bug, House of Fashion, Mimosa, and there are factory outlet, Odell. There are plenty of clothing shops around the city. Okay, just compare it. The dress you can see in the non-meat, it's only available in the non-meat, right? You can see the dress available in the non-meat in the Mimosa, or else House of Fashion, or else Fashion Bug, or else in Odell. The dress available in the Odell, it's only available in the Odell. You can't see the Odell dress in the non-meat, or else in the Mimosa, or else in the Fashion Bug. No, right? So the example for the monopolistic is the product. The product is unique to each shop. The dress available in the non-limit, it's only available in the non-limit, which means it's unique. Okay, and the entry, anyone in the world can start a clothing shop. Even you can start a clothing shop tomorrow. No need to ask anyone. Import the products and you can start selling. Okay, so freedom of entry, yes. You have complete freedom to enter the clothing shop. Okay, freedom of entry is low. Okay, so easy, right? Easy. So low barriers are two answers. Answer number 3 and the answer number 4 is only consider low barriers. So just consider answer number 3 and 4. Nature of the product, homogeneous or differentiator. So actually what is meant by this? Homogeneous and differentiated. Homogeneous means, remember, homogeneous means same. Every product is same. Okay. But the clothing shop, the clothes are not same. It is differentiated. The no limit clothes are only available in the no limits, not in fashion bar. It is differentiated. Okay. So nature of the product differentiated, firm's demand curve downward sloping. So the answer is answer number 4. Like I said earlier, you don't have to remember the entire thing, entire note. Just remember the example. By just having the example, you can generate it. I didn't went for the firm's demand curve. I just found the answers from the column number 1 and 2. On the freedom of entry, I cut off the answer number 1 and 2 and 5. I remained only 3 and 4. Okay. On the second column, nature of the product, I got the answer. This is how the reducing balance method works. Okay, very much easy, very much time saving. And question number 16. A perfectly competitive firm will earn zero economic profit in the short run. A perfectly competitive firm earns zero economic profit. Zero economic profit means price equals average total cost, or else total revenue equals total cost. These are the conditions. Okay. These are the conditions for the zero economic profit. In the perfectly competitive firm can have 3 conditions. Okay. Economic profit, zero economic profit, and loss. Economic profit. Economic profit means the total revenue needs to be more and the total cost is less. Okay. So which means, in a simple terms, economic profit means total revenue is more than total cost. Okay, zero economic profit means total revenue is equals to total cost. Loss means total revenue is less than total cost. Very simple. Very simple. So for the answer number 16, price equals marginal cost, no. Total revenue, total variable cost, no, 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 no. Look at the answer number 5, price equals average total cost, this condition. So the answer number 5 is the answer for the question number 16. Very simple. Very simple. Okay. Zero economic profit means no profit, no loss situation. Okay. You can even get this answer very logically. Zero economic profit means no loss, no profit situation. When you can get the no loss, no profit situation, then the price is equal average total cost or the total revenue equals total cost. Simple. Question number 17. A firm is facing diseconomics of scale will experience. Actually, the diseconomics of scale. I want to show a graph of this diseconomics of scale. Actually, the production can be categorized into short run and long run. Short run can be explained through law of diminishing marginal returns. Law of diminishing marginal returns explain the short run. Okay, which means this graph. I hope you can remember average product, marginal product, and total product. Okay, this is law of diminishing marginal returns. Long can be explained by long run can be explained by economics of scales. Economics of scales, which means long run average cost curve. Long run average cost curve. There are three conditions in the long run. Okay, three conditions, which means this is the first condition, increasing return to scale. Increasing return to scale. This condition is known as decreasing return to scale. This condition is known as constant return to scale. Okay, which means when the long run average cost is decreasing, which is known as increasing return to scales, which means economics of scale. When the long run average cost curve is increasing, it is known as diseconomics of scale. Diseconomics of scale. When the long run average cost curve is constant, which is known as constant return to scale. Constant economics of scale. Constant economics of scale. Okay, so this is the basic theory. So based on this question, okay, the production, a firm is facing a diseconomics of scale will experience a rising marginal cost. No, we are not speaking about the marginal cost. A rising in long run average cost curve as output increases. That's the answer, right? The rise in long run average cost curve. Diseconomics of scale, rise in long run average cost curve. Answer number 2. Okay, decreasing, no, and increase in the output, no, constant, no. The answer number 2 is the correct answer for the question number 70. Okay, and the question number 80. A table shows a firm's total cost and the marginal cost and the different level of outputs. What is the average fixed cost producing 5 units per output? Okay, most of the students got wrong in this question. Okay, output level, total cost, marginal cost. Okay, when the output level is 1, 2, 3, 4, 5, total cost is 250, 295, 330, 375, and 425. Marginal cost is 50, 45, and 35, and 45, and 50. Actually, they are asking about the average fixed cost per unit at unit 5. In the unit 5, they are asking the average fixed cost. So, you know the total cost, right? Total cost is what? The total cost is what? Total fixed cost plus total variable cost is total cost. Total fixed cost and the total variable cost is total cost. So they are asking about average fixed cost. How to get the average fixed cost? If we want to get the average fixed cost, first what we have to do, we have to get the total fixed cost, right? So how do you get the total fixed cost? Most of the students, what does is, they reduce this 50 from the total cost and get 200 and divided by 5, get the answer number 40. Yes, that is correct, but is the way of doing that question is incorrect. The answer is correct. You can get correct answer for this question, but who knows what the question will you get in the 2026 paper. Okay, so I want to explain the correct way how you can do that. So you know the total cost. What is total cost? And do you know what is meant by this marginal cost? Marginal cost is what? The change in the total cost, or else we can say the change in variable cost. Okay, so you know this is the marginal cost. So what is the matter of this? See, the marginal cost for the output number 1 to 2, marginal cost is 45, which means the total cost is increasing by 45. See, 295 to 330. The total cost is increasing by 35, the marginal cost is 35. Here 45, 45. Here 50, 50. So this is marginal cost. The increase in the total cost, okay, when the output is increasing. Okay. So now we know the marginal cost. So how to calculate the total fixed cost? Amma, we need that. So how to calculate the total fixed cost? You can calculate the total fixed cost when the output level is 0. Okay. When the output level is 0, you know marginal cost is 0, as well as total variable cost is also 0. The total variable cost is also 0 when the output is 0. So how much will be the total cost when the output is 0? When the output is 0, you can tell, when the output is 1 to 2, when the output is 1 to 2, the 250, 295, which means 45 increase. Okay. When the output is 0 to 1, the increase is 50, the total cost is 200, which means when the output is 0, total cost is 200. See, when the output is 0, total cost is 200, which means 200 to 250, 50 increase, and that 50 is this. That 50 is this. Okay. And when the output is 0, the total cost is equals total fixed cost. When the output is 0. Okay. So when the output is 0, total cost equals total fixed cost, because when the output is 0, we don't have any total variable cost. We only have total fixed cost. Okay. So when the output is 0, total cost, which is equals total fixed cost, which means total fixed cost is 200. Total fixed cost doesn't change when the output increase. Okay. So the total fixed cost is how much? 200. They are asking when the output is 5. So average fixed cost is how much? 40 rupees. This is how you can get the answer. My opinion, this is waste, completely waste. Even you have the output 1 is very much enough. Even you have that output 1, okay? Even you have the output 1 only, that is very much enough to calculate this answer. Okay? Even you have only output 1. The output T 2, 3, 4, 5 is given to mislead you. Okay? This 2, 3, 4, 5 is given to mislead you. If you are a good person with a good theoretical knowledge, you can find the answer instantly by using the only one and only first output. By using the first output, you can get the average fixed cost. Okay? So that will be the answer. Question number 19. According to the value added method, gross domestic product is calculated by simple. I'll do the question number 19 here. Value addition means final product minus intermediary. Final product minus intermediary, which is known as value addition. So the answer means subtracting the intermediary goods from the value of output. Yes, answer number one. Adding the final, no. Adding, no adding. No adding. Just subtracting. So answer number five, subtracting the value of inputs. No, we are not talking about the input. So the question number 19, answer one is the correct answer. Question number 20. The informal economy refers to activities that are illegal or hidden on the government. Yes, it may be correct. Economic activities that are not monitored by and regulated by the government might be correct. And all economic activities, no. Economic transactions that occur are no. The substitutions of the agriculture economy, no. Answer number one and two is correct. So actually, what is meant by this informal economy? Informal economy is what? The areas which is not monitored by the government and which is not included in the GDP, such as the illegal activities, the drugs, the human trafficking, those are not governed by the government and those are not included in the GDP as well. The hidden economic activities, which is known as the road shops, the karatakade, and the road tea shops, that is not governed by the government and that is also not included in the GDP. The natural growing trees, okay, the plants, and those are not governed by the government and not cleaned by the GDP. And the housewife works, okay, which is not governed by the government and not included in the GDP. So the informal economy refers to answer number two, economic activities that are not monitored and regulated by the government. Okay. So for the question number 20, answer number two is the correct answer. Okay. So this is done. This is done. Okay. Again, I am giving another 10 minutes to do the question number 21 to 30. I'm giving you 10 minutes. Try to do these questions and I will explain the answers. Okay. I will give you exact 10 minutes. Exact 10 minutes. Okay. So we'll start with question number 21. 21. And in an economy where gross disposable income is higher than the gross national income, which reflects, okay, gross disposable income, which is higher than gross national income. What is the difference between the gross disposable income and the gross national income? The difference between the gross disposable income and the gross national income, which is transfer earnings. You know how this gross national income comes? This gross national income comes GDP plus primary income, which is known as gross national income. Gross national income plus secondary income, which is equals to gross disposable income. So transfer earnings or secondary income, which is the differences between the gross disposable income and the gross national income. Okay, if the gross national income, gross disposable income needs to be high, which means there will be a transfer earnings or secondary income. So what is the answer? The country is experiencing a trade deficit, surplus. No, we are not talking about the trade. So answer number 1, 2 is incorrect. Domestic production exceeds the consumption. We are not talking about the domestic production. The country's savings, we are not talking about the savings as well. And the country's net foreign transfers are positive. So answer number 5 is the correct answer. Okay. So for the question number 21, answer number 5. For the question number 22, the selected national income accounting data of the hypothetical economies are given below. Okay. And figures are in the billion. Okay. So they are asking to calculate the GDP and GNI, gross domestic product and gross national income. Actually, you have to do this question by using the income approach. Income approach. Okay. So in the income approach, there are some components. Compensation of employees, you have to add. Okay. Gross operating surplus, you have to add. Mixed income, you have to add. And other taxes less subsidies. Okay. So how you do this question? Okay. Compensation of employees 600, gross operating surplus 800, and mixed income 850, and other taxes less subsidies production, other taxes 50, which is equals to 1400, 900, 2300. This is GDP at basic price. This is GDP at basic price. Comprises the compensation of employees, gross operating surplus, mixed income and other taxes, which is GDP at surplus. Sorry, GDP at basic price. Okay. So with the GDP at basic price, we have to include taxless subsidies on the products and services. Taxless subsidies, which means 120. After including these, 2420, which is our GDP. GDP. With the GDP, 2420, we have to minus what? Net primary income. As I told earlier, with the GDP, we have to plus net primary income, which means minus 20. 2400 is our GNI. So the answer will be answer number 1. Okay, 2,420 and 2,200. With the GDP, we have to add primary income, and the primary income is minus 20, which means 2,400, which is our answer. Question number 22. We'll go to question number 23. In a closed economy with no government, an increase in the investment 200 million results in increase in the consumption of 800 million. What will be the marginal propensity consumption? Okay, they are asking the marginal propensity consumption. So, increase in investment. Investment is increasing by 200 million. Okay, investment is increasing by 200 million, and it results increase in the consumption of 800 million. Okay, consumption increasing by 800 million. Okay, so what will be the MPC? Okay, so what will be the MPC? How do you calculate the MPC here? You'll be confused, right? Simple way is this. So they are telling in a closed economy with no government, which means if it is a closed economy, Y equals C plus I on D, not G, not X, not temp. Y is only equals C plus I, which means increase in the consumption of 800, increase in the investment of 200, which results increase in an income of 1,000. Okay. So now how can you calculate increase in the income of 1,000 divided by 1,000 divided by 800, which is 0.8. So how to calculate MPC? MPC is delta consumption divided by delta Y. Ne? This is the equation for MPC. So 800 divided by 1,000, 0.8 is our MPC. Okay, the question number 24. The diagram shows an aggregate demand curve. What is measured by the horizontal axis? The question number 24. This is the graph, right? We use this graph, okay, this is price. We use this graph in order to calculate what? Macroeconomic equilibrium. This is the original graph. The AS aggregate supply. AD equals AS. This is the original graph. They didn't mention the AS aggregate supply. They only mentioned the AD in order to mislead you. Okay. There are three ways we can show the macroeconomic equilibrium. Y equals E, income equals expenses, aggregate demand equals aggregate supply, and withdrawals equals injection. Okay. So this is a method you can show the macroeconomic equilibrium. Aggregate demand equals aggregate supply. This is the price axis. They are asking about the x-axis, horizontal axis. This is the real gross domestic product. This is the real GDP. Okay, so answer number 4 is the correct answer. Okay, real GDP. Question number 25 then. Assume that the economy is in equilibrium with the intersection of aggregate demand and aggregate supply curve. Okay, like this. Okay. Economy is an intersection of aggregate demand and aggregate supply curve. This is aggregate supply curve. This is aggregate demand curve. So this is an intersection. This is price and this is the GDP. Okay. If there is an increase in the government spending with no corresponding increase in the taxes, what is most likely to run in short run? Increase in the government spending. So what will happen if there is an increase in the government spending? Before moving to that, I want to let you know the aggregate demand components. Like Y have C and I and G, X and M. The aggregate demand have C plus I plus G component. This is the equation for aggregate demand. Okay, aggregate demand comprises of consumption, investment, and government expenditure. Okay, if if the government expenditure is increasing based on this question, if the government expenditure is increasing, which means aggregate demand is going to increase like this. Okay, so what happened if aggregate demand got increased? The price increase, the GDP increase. So let's look at the answer. Aggregate demand curve will shift to the left, wrong, which is very much wrong. So answer number 1 is incorrect. Aggregate demand curve will shift to the right, leading the higher output and the higher employment. Yes, it might be. It might be. Okay. So read the rest of the answers also. Aggregate demand will not change. No, it's not correct. Aggregate demand curve will shift to the right and leading the lower output. No, its output is increasing, right? So answer 4 is incorrect. Aggregate demand curve will shift to the left. No. Answer 5 is also incorrect. So answer number 2 is correct for the question number 25. This is how you can get the answers. Question number 26. Now question number 26. Question number 26. Suppose the businessman withdraws 50,000 from his safe and deposits money. The commercial bank, okay. If the bank hold no excess reserves, the statutory reserve requirement is 10%. How will the deposits increase the required reserves and the bank lending ability? Okay. So just do this question. The man withdraws how much? 50,000 rupees. He is going to withdraw. And the reserve ratio is 10%. Okay. So they are asking to calculate the required reserves. So simple. How to calculate the required reserves? 50,000 deposits multiplied by 10%. 5,000 is the required reserves. Okay, 5,000, answer number 4 and 5 is the required reserve. Okay, and they are asking the lending ability. Lending ability. Okay, since 50,000 is deposited, 5,000 is the required reserves. Lending ability will be 45,000. Answer number 4. Very simple. No hard things. Okay. No hard questions. They are asking about the reserves and the lending ability. Reserves is 5,000. Lending ability is 45,000. You know, for each and every deposits, okay, the bank needs to maintain a certain amount of rupees as a reserves for the central bank, and only this excess reserves, this lending amount of reserves, only they can give to the loans to the customers and they can get interest from them. Okay, So the reserves is 5,000, lending ability is 45,000. Question number 27. Okay. Which of the following statements best distinguishes between the demand pull inflation and cost push inflation? There are two types of inflation. Demand pull and cost push inflation. How does this demand pull inflation comes? This is how the demand pull inflation comes. Okay? In equilibrium, demand and supply is there. Okay? When the demand increase like this, the price is increasing, right? This is the demand pull inflation. The demand increases, inflation increases. Cost push, this is the aggregate demand curve. Okay? This is the aggregate supply curve. Okay? Sorry. So, see, the supply curve shift to the leftwards, and the price increase. The supply curve shift to the leftwards. This is cost push inflation. So, how this demand pull inflation comes? When there is a less amount of goods, the goods are less, not enough goods, but people have money, which means in a common statement we can say lot of money, huge amount of money chasing into a small amount of goods. For an example, we can say in the recent years we had petrol polling, kiripiti polling, gas polling, which means people have money, but people waited in a long queues to have a small amount of goods, right? The petrol supply is small on those times. We didn't have enough petrol, but people were there to buy lot of petrol, not for the sake of getting free. People had money to purchase it, but we didn't have petrol to supply. We didn't have milk packet. We didn't have gas. So that's why we had gas polling, petrol polling, and kiripiti polling. That's why the prices went in a huge level. Okay, so that is demand pull inflation. So what is this cost push inflation? Cost push inflation is what? The supply curve is getting leftwards, which means the input expenses such as the cost of the production is getting high. Due to what? The input is increasing and the labor unions are demanding for the high wages, so the labor price is increasing. Due to that, the cost of the production increasing. Since the cost of the production increasing, the inflation goes high. Okay, so this is meant by the demand pull and cost push inflation. So what they are asking, which statement is best distinguish the demand pull and cost push inflation? Okay, look at the statements. The aggregate demand curve will shift to the left. Does it shifting to the left? No, right? So the first answer is incorrect. Second one, aggregate demand curve will shift to the right, leading to the higher output and the higher employment. Yes, is leading to the rightwards. The aggregate demand will not change, which is wrong. The aggregate demand curve will shift to the right, leading to the lower output. No lower output. The output is increasing. Okay, and lower employment. No. The aggregate demand curve will shift to the left. No, which is wrong. So answer 2 is correct. For the question number 25, I guess. How? 22, 23. Sorry, 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 sorry. Sorry, 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 sorry. I think yes. I think I read the question number 25. Sorry, sorry, sorry. Again, my mistake. So question number 27. Which of the following statements are best distinguished between the yes? Demand pull inflation is created by excessive supply, while cost push inflation is caused by excessive demand. Demand pull inflation by excessive supply? No, right? Demand is increasing. No. Second one, demand pull inflation occurs the aggregate. No, demand pull inflation occurs the aggregate demand increases. So the answer number two is no. Answer number three, demand pull inflation caused by the increase in wage rates. No, demand pull inflation is caused by the small amount of money, a small amount of goods, high amount of money. Increasing in the wage rate is a cost push inflation. Demand pull inflation is driven increasing in aggregate demand, yes, while cost push inflation is driven increasing in the cost of the production, as I told. Okay, so answer number four is correct. So I think I misread the question number 25 or the question number 27 earlier. My apologies. For the question number 27, answer 4 is correct. Okay. Next, high powered money includes. High powered money includes time deposits held by the public at the commercial bank. Okay. And yeah, savings and savings held by the public. Sorry, the answer is not clear here. Yes, answers are yes. High powered money includes time deposits held by the public at the commercial bank. Yes, it includes that. Saving deposits held by the public at the licensed banks and the finance companies. Okay. Currency held by the public and the reserves of commercial banks. Okay. Loans issued by the commercial banks. Okay. And foreign assets held by the commercial banks. Okay. High powered money, note that high powered money only includes the currency held by the public and the reserves held by the commercial bank. So for the question number 28, answer 3 is correct. The currency held by the public. Okay, the currency held by the public is correct, but the look at the answer number 1. The currency held by the public is correct, but the time deposits means the uh, fixed account. The fixed account is not considered as the high powered money. So the question answer number 1 is wrong. Savings held by the public, yes, it will be considered. And the finance companies, no, the finance companies' money is not considered as the high powered money. The currency held by the public, answer number 3 is correct. Okay. So for the question number 28, answer number 3 is correct. Let's go to question number 29. Select the statement that best explains the relationship between the interest rate and the speculative demand. So this is the graph of interest rate and the speculative demand. Money demand. Okay. Interest rate and money demand. Which means inverse relationship. Inverse relationship between the interest rate and the speculative demand. This is the graph. So look at the answers. Speculative demand for money is independent of interest rates. Okay. So does it correct? I don't know. The speculative demand for money is directly proportional. Directly proportional means the positive. No, right? It's not positive. Speculative demand for money increases as interest rate increases. No, there is no positive relationship, which is a negative relationship here. The speculative demand for money decreases as interest rate rises. Yes, speculative money demand is decreases as interest rate rises. Negative relationship. Answer number 4. The speculative demand for money is infinite. No. Answer number 4 is correct for the question number 29. Negative relationship. For the question number 30. So yes, New Central Bank Act number 2023 has been liberated for the Central Bank of Sri Lanka from printing the money, no. Granting the direct and indirect credit to the government, and playing the role of a banker to the government, conducting the open market operation to the policy instruments, intervening to the foreign exchange market. Okay, so the Commercial Bank Act number 2023 says granting the direct and indirect money to the government. So this is a general knowledge question. This question is included in the 2024 paper because this 2023 Act was recently came into the power, okay, in 2023. Okay, so this 2023 Commercial Bank Act was recently came, so that's why it is included in the 2024 paper. But 2026 students, you don't have to worry because this act won't be tested in the 2026. Okay, so you don't have to worry about that. Okay, only because this tested in the 2024 because it was implemented on 2023. So for the question number 30, answer number 2 is correct. Okay, so 2026 A-level students, you don't have to worry about this question number 30. Okay, it's just a general knowledge question. So just read the answer, that is very much enough. Okay, so yes, question number 21 to 30 is done. Is done. Now I will give you again the 10 minutes for question number 31 to 40. Again at 10 minutes. Okay, again at 10 minutes. So I think the question number 31 to 40 is very much easy, I guess. Okay, so just have a try on it, the question number 31 to 40, and I will give you the answers. I will show you how to do those questions. Okay, so your time starts now. Okay, so now we'll start with the question number 31. Okay. So now we'll start with the question number 31. The context of public goods, non-rivalry in the consumption. So you know what is meant by the public goods, right? The public lights, the street lights, and the national defense. So these things are known as public goods. So non-rivalry means you don't have to be a in order to get some goods. Sorry, in order to get the good. Okay, so that is actually meant by the non-rivalry. So non-rivalry means the good can be consumed by only one individual without reducing the available for others. Yes, that's the actual meaning. If you consume that good, that doesn't mean that is not available for another person. Okay, very simple. Okay, if you go to the street light, you are sitting under the street light. So it means you are consuming another product. Okay, anyone can come under the street light and enjoy the light. Okay, so no one can be excluded. So for the question number 31, answer 1 is correct. For the question number 32, for the question number 32, what is the most accurate the main feature of the regressive tax? Regressive tax means when the income increase, the tax rate decrease, like this. This is the regressive tax. When the income increase, the tax rate decrease. Regressive tax. The low income earners pay higher proportion of their income tax and high income earners pay low proportion of the income tax. Okay. So for the question number 32, answer 1 is correct. See, low income earner, high proportion, high income earners, low proportion. Again, for the question number 32, answer 1 is correct. Okay. You can do this by using the reducing balance method. Okay. So I don't want to elaborate those things because for the 30 questions, I did the same thing. No? Yes. For the question number 33, what is the most accurate statement about the impact of transfer payment in the first fiscal policy? The transfer payment means the pensions, okay, the samurdis. So those stuffs are known as transfer payments. Okay. So look at the transfer payments here. Okay, question number 33. The transfer payments directly affect the aggregate demand by increasing the government expenditure. Yes, the transfer payment is increasing the government expenditure, but look at the answers further. The transfer payments do not affect the budget deficit as they are not part of the government. No, no, no. It's a part of the government expenditure. The transfer payment, it comes under the current expenditures. Transfer payment increase the government spending without directly contributing to the production of goods and services. Yes. You are giving the pensions, some of the subsidies. Does this increase the production of goods and services? It's a free money, right? For the elders, it's a free money. So it doesn't increase the production of goods and services. Transfer payments encourage the growth? No. Transfer payments can influence agreement demand? No, 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 no. So answer 3 is the correct answer, which is not increase the production of goods and services. Question number 34. The main contributors to the significant tax rise, the main contributors to the significant rise in the tax revenue in the Sri Lanka after the 2022 were income tax, import duties, service charges, special commodities. So this is the nutshell. Okay. Our main tax incomes. Remember, our first main tax income is excise tax. Excise tax is our main tax income. After that, VAT. After that, income tax. These are the main tax contributors in our tax income. Okay, so question number is main tax contributors. Question number 34, which is answer number 3. Look at the answer number 3. Income tax, value added tax, and the excise duties. Answer number 3. Now go to the question number 35. Okay, 35. In the context of International Monetary Fund debt restructuring process, what is meant by debt sustainability analysis? It's a general knowledge question. Okay, debt sustainability analysis, which means an analysis to determine the amount of debt to a country and sustain without defaulting. Answer number 1 is the correct answer. It's a general knowledge question, which means debt sustainability analysis means how much debt we have currently now. Okay, how much debt we currently have now, and we pay that debt later in the future without defaulting. Without defaulting means without the economic decline, without a broken situation. Okay, can we do that? So that is known as debt sustainability analysis, which means in the future, in the near future, can we pay the debt without declining, without a broke. Okay, so that is known as debt sustainability analysis. Okay, so the question number 36. We'll go to the question number 36. A country has a comparative advantage in a producing of a good if it has the lowest opportunity cost. Yes, comparative advantage is always talking about the opportunity cost. So if a country have a lowest opportunity cost, that is the comparative advantage. Look at the answer number 2. It produces more goods than any other country. This is absolute advantage. The answer number 2 is talking about the absolute advantage. Answer number 1 talking about the comparative advantage. 3, 4 and 5, it's not necessary. Question number 37. Okay. Question number 37. Okay. Consider the domestic industry where the value imported inputs are 5,000 and value of final product is 10,000. If the tariff of the final product is 25% and tariff of imported input is 20%, what is the rate of effective protection? Okay. So they are asking about ERP. ERP, effective protection rate. How to calculate the effective protection rate? Effective protection rate, this is the equation for effective protection rate. V1 minus V0 divided by V0 multiplied by 100. Actually, what is meant by V1? Value added after tax. V0 value added before tax. So let's calculate the V1 here. Okay. So imported inputs are 5,000. Inputs are 5,000. And final product is 10,000. And tariff for the final product is 25%. For the inputs is 20%. Which means 20% for the 5,000 is 1,000 rupees. 25% for the 10,000 is 2,500 rupees, I guess. Yes. 10,000 multiplied by 25%. So the new price 5,000 plus 1,000, 6,000 is the new input after tax is implemented. This is 12,000 500. You know, we are importing, actually we are importing the inputs and the final outputs from a country. Okay, so for the inputs import, we are having a 20% of a tariff. For the final product imports, we have 25% of a tariff. So this is the original product. After tariff is implemented, this will be the new price. So you know how to get the value addition. How to get the value addition? Output 12,500 minus 6,000, which means 6,500. This is the value addition. V1. V0, value addition before tax. Before tax is how much? 10,000 was the output, 5,000 was the input. So 5,000 is the V0. So which means 6,500 minus 5,000 divided by 5,000 multiplied by 100, which means 1,500 divided by 5,000 multiplied by 100. So how much is that? %30. Answer number 4. Answer number 4. 30%. Okay. Question number 38. Question number 38. Okay. What is the newest bilateral free trade agreement signed in Sri Lanka? What is bilateral agreement means? Bilateral means if two countries have signing a trade agreement. If two countries have the agreement, that is known as bilateral. If two or more countries, if more than two countries having an agreement, that is known as multilateral. If more than two countries have an agreement, that is known as multilateral. If two countries have the agreement, that is known as bilateral. For this general knowledge question, the answer is 5. Thailand and Sri Lanka free trade agreement, which is the newest bilateral agreement, which is signed on 2022. Okay. Thailand and Sri Lanka free trade agreement. Okay. Question number 39. Okay. What is the balance of current account of the balance of payment? Okay, they are asking to calculate the current account. You know, current account. There are 3 portions of current account. First is goods and services account, primary account, and secondary account. These are the components of current account. Huh? So, let's get the goods and services account. Trade balance is 120.1, which is a goods account, which is trade balance. Service balance is 29.3. Primary income minus 25.8. Secondary income 11.5. Okay. So if we do that, the answer will be 135.1 billion. Answer number 2. Okay. Now let's go to the question number 40. Question number 40. Which of the following scenarios will satisfy the Marshall and Lerner condition? So what is the Marshall and Lerner condition? Marshall and Lerner condition means the price elasticity demand of exports and price elasticity demand for the imports together needs to be more than one. This is the Marshall and Lerner condition. So what is the answer for the Marshall and Lerner condition here? The price elasticity of demand exports is 0.8. The price elasticity of demand for the imports is 0.6. So answer number 2, 0.8, 0.6, which is equals 1.4, which means more than 1. So this is the answer. Answer number 2 is the answer. Okay. So that is the Marshall and Lerner condition. Marshall and Lerner condition means, okay, the condition which we can have a good trade policy. Okay, so that is the Marshall and Lerner condition. That condition says that if the PED needs to be more than the PED for the exports and the PED for the imports, both together needs to have more than one value. So on that occasion only, we can have a good trading opportunity. So that is known as Marshall and Lerner condition. Okay, so just again, this is done. I think for the 41 to 50 questions, these are the most general questions. Okay, I will give you 5 minutes to do the 41 to 50 questions. Okay, try that your own. After exact 5 minutes, I will explain how to do this 41 to 50 questions. The 41 to 50 questions, you don't have much of calculations here. Most are the very much theoretical questions. Okay, so I will explain that. So your last 5 minutes is starting now. Okay, so let's start with the question number 41. Okay. If a country's effective real exchange rate depreciate, suggest that. Okay. Actually, Putha, there are two concepts called appreciation and the depreciation. I'm briefly explain appreciation and depreciation. I'm briefly explaining that. Appreciation is what? With a real example, I can say $1 is 300 rupees at 2019. Now $1 is in 2020, $1 is 280 rupees. This is appreciation. Comparing to the dollar value, our rupee is reduced, right? This is appreciation. Actually, what is meant by this depreciation? $1 is, imagine in 2019, $1 is 300. In 2020, $1 is 330. This is depreciation. This is depreciation. Okay, which means our value is going to less. So if the currency depreciates, what will happen to the foreigners? To the foreigners, our monies will become very cheap. Okay, so that's why foreigners like Canadians, Americans, Europeans will come to our country to enjoy their vacations. Okay, look at now. Look at us. Imagine how many of Sri Lankans spend their vacation on the America, Europe, Canada. Shall we go there? No, right? Because for us, going for the America, Europe, Canada for a trip is very much expensive. But for them, it's not expensive. It's very much cheaper. So that's why foreigners are coming to Sri Lanka. Okay. So that's the main difference between appreciation and the depreciation. So what? If the real exchange rate is depreciate, the answer is answer number one. The country's exports become cheaper relative to the foreign goods. Yes, if our currency depreciates, our country's products will become cheaper to the foreigners. Okay, so the answer number one is correct. Okay, so let's move to the question number 42. What is central bank swap agreement? This swap agreement also recently came, I think, in the 2022 or 2023 due to the crisis. Okay, so it's just a general knowledge question. So answer is two. The bilateral agreement between central banks can exchange the currencies to stabilize their rates and provide liquidity. Okay, so the question number 42, the answer is two. Okay, it's just a general knowledge question. Swapping means exchanging the currencies. Okay. Question number 43. Question number 43. Okay. Which factor is most likely to cause the improvement in human development index despite the stagnation of income growth? Okay. Human development index. Human development index have three main subparts, which means life expectancy, education, and income. These are the three main components of human development index. So based on that, the answer will be answer number one, life expectancy rate for the question number 43. Okay, let's go to the question number 44. The middle income trap means, which means middle income trap. Okay, so actually Sri Lanka is considered as a middle income country. In 10 to 15 years back, Sri Lanka is considered as a lower income country. Lower income country means what? The countries like Africa is mostly considered as a lower income country. So what the rest of the world do for that Africa? They give donations, right? So for the 10 to 15 years back, Sri Lanka was the lower income country. So we were enjoyed lot of foreign donation, foreign transfer payments, and foreign incentives. But after we become a middle income country, which that indicates Sri Lanka is developing. Okay, after we become a middle income country, the amount we received as a donation will be reduced. So that is a middle income fact. So the answer will be the country struggles to grow after reaching a middle income level, failing to transition to the high income status. Okay, so the answer number 3 is the middle income trap. Okay, which means in a simple terms we can say the country will, the rest of the world will give the donation as to grow, but not grow faster than them. Okay, so for the African countries, they will give donations, huge amount of donations, but they won't allow Africans to grow faster than them. Definitely, they won't allow Sri Lankans to grow faster than them. They will go. They will give any kind of donation. The China is giving donations to Sri Lanka. The Japan is going to Japan is giving donations to Sri Lanka. The donation we receive is huge, but they won't allow us to grow more than them. Okay, so since the time is very much limited, it is uh, we are nearing to the 11 o'clock, so I have to finish the seminar as soon as possible. Okay, so that's why I can't talk a lot and have to finish these questions, last 5 questions, as a faster manner. The table shows some selected socio-economic data for a country for the 2 time periods, 2010 and 2020. Okay, so the answer is, which of the following statements, socio-economic status economy in the period, is consistent with the data represented with the table? Okay, so the nominal GDP, look at the 2010 to 2012, the nominal GDP is increasing, the literacy rate is increasing, mortality per rate, which means the childbirth and the disabilities, is reducing, and the general price level is increasing, which means an increase in the GDP improving in their life standards. Answer number 1. Because our GDP is increasing, okay, real output increase, literacy rate is increasing, and our price level is increasing. Okay, simple as that. Let's go to the question number 46. Okay, the old age dependency ratio is can be calculated as the individual's, answer number 3. This is the ratio. The individuals more than 60 years divided by people 15 to 59 multiplied by 100. This is old age dependency ratio. Okay, answer number 3. Okay, for the question number 47, we go to the question number 47. Question number 47. Which of the following countries is most likely to have high Gini coefficient? So this is the graph for Gini coefficient. You know the Lorentz curve, right? Actually, this is the Lorentz curve. So Gini coefficient is calculated this ratio, this triangle to this. Okay, a triangle which move forwards to this area, which means high income inequality. So the country which mostly have high Gini coefficient means a country with a large informal sector and minimum safety nets, which means high income inequality. High informal sector. High informal sector means the country have more drug lords, the drug trafficking, more informal sector like as money laundering, those things will be happening hugely. So that's why there will be a high income inequality. If a country needs to have a equality, which means every person, every society, every people in a country needs to pay tax. If everyone pays tax, the country will have a very huge equality. If everyone doesn't pay taxes, which means they will do money laundering, drug trafficking, which means very high informal sector, which means high income inequality. Question number 48. Question number 48. Okay. What is the significance of the Colombo port city of the Sri Lankan economy? Okay. Answer is 1. The major initiative to attract foreign and trade. Yes. The port city is built to attract the foreign investments. It's not a tourist attract place. Okay. Likewise, in the Dubai, we have a Burj Al Arab. Okay, which is a not a tourist attract place, which is a hugely attracted for foreign direct investments. Okay. The question number 49. What is the a major trigger of Sri Lankan economic crisis in the 2022 was? We had a crisis in 2022. Okay, the major trigger was an unsustainable accumulation of foreign debt. Yes. Question number 5. Answer number 5. We had a huge foreign debt in the 2022. That's why after President Ranil Wickremesinghe came into power, we went to a debt restructuring program. We went to IMF. We asked some incentives in order to pay loans. Okay, so our huge debt is our huge trigger point. Sri Lanka have a very huge debt. Billions of debts are there for the Sri Lanka. So okay, though that's why we are still moving backwards. Okay, yes, I don't want to explain more about that because we don't have enough time for that. Question number 50. IMF extended fund facility for the Sri Lanka year 2023 primarily aimed to restoring the macroeconomic stability and the debt sustainability. This is a general knowledge question. I am pretty sure in the 2026 exam paper, these general knowledge questions won't be tested. Okay, so that is the pretty much today. Okay, so yes, I think now correctly at 11 o'clock. Okay, so I think most of the students get very much sleepy today. So yes, I think we have finished the 50 questions today, and I have explained the how to do your MCQs and those structures and all the things will be explained today. Okay, so I think my session was very much clear for the students, I hope. Okay, and if you have any clarifications further, please reach me out in the WhatsApp. And again, I am writing my number. This is my number 07120126992. This is my number. Please reach me out in the WhatsApp. Any help you need, I am there for you. Okay, so please reach me out in the WhatsApp, and I have my tudes. Okay, I have my tudes and the recordings as well. If you want to get any, please reach me out in the WhatsApp. Okay, we and our admin team, we are looking forward to helping you guys. Okay, so August 10 is your exam. Okay, and today is 16, July 16. Less than 30 days, around 20 days are there for the exam. Okay, so for my students, this will be the last session. This is the last time you are seeing me by lecturing. So Yes, that will be the end of today, end of this 2026 journey for the economics. Okay, so yes, I am wishing you a very good, all the best for the exam. I'm wishing you, I'm hoping all of the students needs to get the A pass for the economics. I am wishing you all to fulfill your dreams. Okay, so yes, so goodbye then, and see you when you get the results. Okay, thank you. Thanks for joining for the session. See you.